Hello, this is the tradesight U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 24th of March 2014, ending Friday the 28th. After this week will leave us, believe it or not, one day left of the first quarter of 2014 already. Usually that'll be a slow day, but that's for next week's discussion. I hope you all had a good, interesting week with a two-day Fed meeting ending on a Wednesday where options unraveling should have occurred for triple expiration, and then Friday's triple expiration where the broad market did very little, sold off a little bit in the afternoon, whereas the Nasdaq side got clobbered by 50 points or so. Very unusual action in general. Here's a look at the S&P 500 daily chart, and still really nowhere. This last month's been fairly tame in terms of net action. But we have finally left the options behind us for the quarter, so we'll be looking at a new option cycle starting Monday. It usually takes a day or two to get back into that. Charts as usual, brought to you by eSignal 11. Here's a look at the Nasdaq 100 index. See the drop here, a big outside day down. Basically, an outside day down for the week. Today's action opened up and then covered the entire week's range. You'll see that when we get to the futures here in a few moments. Pretty negative action on the Nasdaq side. Doesn't look too negative in the overall chart picture, of course, but certainly for a single day sell-off. I mean, keep in mind we had a big day down at the beginning of February. Recovered from that. We had a big day down over a week ago and ignored it. So, individual days don't necessarily mean anything, and we're not breaking any key levels here. The concerning part, of course, is the biotech index, because the saying goes, as banks and biotechs go, so goes the market. And here's a look at the biotech index taking a big hit. Stocks like BIIB got clobbered to the tune of 30 points, 10% down here on Friday on heavy volume. We had some nice winners ourselves on the short side, called stocks like REGN. Here's a look at that one, and CELG. So we had some real nice winners breaking down these patterns in the biotech sector. Let's look at the semiconductors. Actually swept a new high for the year and then rolled over a bit. So it's a little deceiving because for example, the S&P actually barely swept a new high for the year, and yet here we have the biotechs breaking down so hard the Nasdaq side clobbered because of it. And meanwhile, for options expiration itself, here's Apple closing out just above 530, stayed near that 530 price the whole time. We talked about 1200 on Google. It did move away from that in the afternoon here a bit as the Nasdaq side got really negative. But still holding up near highs, of course. Amazon rolled over a bit here on Friday, and Netflix had a down day too after registering a 9-bar down setup on Thursday. So let's look at Tesla also, and then Twitter, just because we like to. Tesla has a nice pattern for a massive breakdown. Probably see that one on the main stock report for this week. And Twitter recovered actually up for the day. Pretty interesting there. All right, so that's where we're at from the major indices. Let's take a look now at the intra week action here. This is the S&P E-mini futures. You can see back from last Sunday, we gapped up to Monday morning. That's the start of this chart. Headed higher initially, and that was the range for the day. Then the rest of Monday was fairly flat. Tuesday, we had a nice trading session for stocks, but again, a gap and go session, and then dead flat after that. Remember, that was the beginning of the two-day Fed meeting, so usually that's what you get on the first day. Is the first hour can be interesting, then you flatten out. You tend to have a market this flat during the actual Fed meeting, so when it goes 2 days, as these have been doing more frequently, you can see that that's what's typical of a market. This is why we suggest to people not to try too hard or trade too heavily during the Fed meetings, just because this is what typically happens. And then you got the announcement, not much there, and then you got Yellen's speech in the press conference where everything rolled over, spooked the market a little bit, talking about the potential for. Sorry, my alerts are still going off because the market's still open here on the Forex side. Talking about the potential for the Fed to start raising rates within 6 months of the end of easing, a little bit sooner than some people had thought, but that's still a ways off. And we rallied back Thursday, and who knows where in here there may have been some options unraveling both ways in the sell-off Wednesday and the move back up Thursday. But if you look at it, the late afternoon Wednesday and the Thursday move up basically washed each other out, and then we gapped up Friday. And here's what I'm talking about. Very flat early, not much here. This is what you would expect to see for options unraveling, and maybe a move back to fill the gap. We did head all the way down and hit this static trend line of the last 9-bar move up in the process. And we also created a new 9-bar move down, and we're almost 13 to a Comer buy signal on this chart. Now, if I switch the 5-minute chart real quick just to show you something, we had a nice bounce on the Comer here. We had a 13 buy signal and got a play off of that in the lab on the 5-minute chart. But in terms of the 10-minute chart, what's interesting, it tells you how flat this week is. There are no 9-bar counts registered Monday, Tuesday, or Wednesday, either direction. It's pretty unusual. All right, let's take a look at the Nasdaq futures at the same time. And here you can see a little more movement. And again, it doesn't look like too big of a deal, but here we go. Monday we gap up and then so flat after that. Tuesday, little gap up and ran a little bit Tuesday. That's why we did pretty good Tuesday morning, really. Wednesday was flat, dropped. Thursday recovered. Friday gap up, and then this really sharp sell-off. I mean, from the gap to the drop was 50 points in an hour on the just over an hour on the NQs. Tried to recover and then sold off in the afternoon. The only gap we haven't filled is the one from the start of last week, so that could be a target early. So let's now take a look at the economic data that's coming out this week and get prepared. Keep in mind, there is no economic data on Monday, so that's okay. Monday's the start of the new quarterly option cycle. Tends to be a little slow anyways. Not much we can do about that. Tuesday, Case-Shiller 20-City Index and the FHFA Housing Price Index, not a big deal. Consumer confidence can move the market. That's 30 minutes in, along with new home sales. Wednesday, the MBA Mortgage Index, no big deal. Durable orders before the market. Crude oil inventories, nothing huge there. Thursday, the weekly initial and continuing jobless claims data. Third look at GDP for the fourth quarter, not a big deal. Pending home sales, and then natty gas. Friday, personal income and spending, PCE, core prices, and the Michigan sentiment final data for the month of March. By the way, by Friday of next week, we expect things to be slow Friday, not just because it is a Friday, but because you're heading into that end of quarter, and they usually get the prices about where they want them within a day or two at the end of the quarter. So Friday probably will be slow, and then the following Monday will be slow. Then we head into April, where April's one of the best trading months of the year, typically on average. We'll see if we get it this year. We've had some really nice days here, not 5 days a week, but you never really have that. But certainly 1 or 2 really nice days every week so far this year, and volume has been generally better, although this week it was light early on. We like to show that chart as well. So let me pull it up really quick. We've been monitoring that as we've been going here every week. Yeah, obviously we had some big volume here on Friday for a triple expiration. That happens every quarter. You can see it back in December, the same number. But look how low the 4 volume days were this week compared to everything else we've had so far this year. And as a matter of fact, if I insert a quick moving average on here just to give you an idea. Here's our 10-day moving average that we like to apply to watch these things, and you can see the volume. We had been hitting a new high for the last year and a half, 2.1 billion shares on the 10-day moving average of volume, and it dropped back sharply under 2 billion for the week. So something changed this week, certainly in terms of activity. It was kind of unusual. I mean, you did have the Fed, but you have a lot going on in the world. There is the basketball tournament that does make a difference, of course, but this just seems a little strange to have dropped off that much. So hopefully the volume comes back in, and then we can hit into April. There is one holiday in April. That's Good Friday, the April 18th. Markets are closed that day. Rest of April we are open, and like I said, it's typically a good trading month. A lot of times right around tax day, which is April 15th, or a couple days before it, is a key turning point in the market. So we'll be keeping an eye on that. We will be calling it from the room as usual. Hope to see you there for stocks and futures calls. Everybody have a great trading week and a great weekend.